Hello, everyone. What am I showing you here? I guess I should be showing you the dashboard. Sorry about that. But let's start that again. Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief Recap. Hey, we're live on YouTube. Awesome. We didn't do a video yesterday. In fact, actually, being New Year's Eve, it was kind of an odd day for me. But anyway, we made it out of 2020 into 2021. Happy New Year's. Woohoo, party. All right. Thanks. Wonderful. Dashboard is in a limited capacity operating at the moment. Stuart's working away, just building it out. We had a goal of today to have this thing up and running. To all intents and purposes, it is. It's just a question of him tagging everything correctly. So super proud of Stuart for pulling that off. I'm not really impressed with what I see. How do we say this? I'm a little concerned that there's some really bad sort of themes that are being promoted here, and how can we get through and into the next cycle? Next couple of years could be pretty challenging, whether it be hyperinflation or whether it be stagflation. I have a funny feeling there's going to be a lot of people that are going to be encouraged to sort of embrace this welfare state, but I think it's a trap. And then once sort of the crisis is done, remember, collecting social assistance, that kind of stuff, it's very, very addictive and it's a trap. And I explained to the community, I can speak to you from first person experience. It's not like I'm just sitting here as some capitalist going, you lazy bum, get a job. I lived that life with a severely mental ill wife that ultimately took her own life and a severely disabled child. So I have worked very intimately with these government agencies and government bodies. I don't like the trends that I see established. And just for the record, I do not collect any of these payment plans. Don't accept any money from any third party. Probably some people are going, wow, Brian, you're missing out on free money. No, I don't want to have any association with it. And when the tax man and all that shit comes to settle the bill, they're not going to have a conversation with me. They're going to be like, well, you don't owe us anything, so you paid all your taxes in previous year. You didn't collect any handouts, so you're not on the hook. And that's how I'd like it to be. Yeah, we'll see how it goes. I'm not necessarily, obviously, in your own personal situation. I'm like that, neither a debtor nor a lender be kind of guy. I don't want to participate in any of that kind of stuff. Obviously, your own personal situation, you have to deal with the situation as it is. And I do see that our society basically has set up the baby boomers now in their elderly age. If they didn't, become an ant and they're still a grasshopper, they're entirely beholden on a set fixed income stream, whether it be a bond coupon or whether it be Social Security or Medicaid or whatever. And the powers that be are just going to dilute that payment into nothing. So our standard of living just gets diluted to make sure that the system just keeps going and they just monetize all that debt obligation. How this ultimately finishes, I don't know. Historically, you're not supposed to fuck with your country's money supply. And all of the anxiety and the angst that you see in the market right now, I think is going to be expressed as higher prices. The problem here, and I had a long conversation with the site members today, doing sort of a more macro kind of conversation, given it's a holiday today. What does the economy really look like? Does the economy actually look like this? I would unequivocally say no, it doesn't look like this whatsoever. What does the economy actually look like? Well, it actually looks more like this, where this is the price of these assets, taking into account that the central bankers have just printed money to artificially prop up these prices. This is actually what your real world looks like. And I made the joke with the the site and social media and stuff that ironically enough, it's not really like Bezos, Amazon $3,000 a share. Like what the fuck? Microsoft, Zuckerberg, Mr. Personality, Mr. Congeniality himself. It's not like these guys are getting stinking rich, seeing their stock prices go up. It's really more of they're just treading water. And all of us, you and I, our purchasing power, or literally our standard of living, is collapsing in front of our eyes. That's what's really going on here. Those guys, they're just treading water. So as a result, you see their stock prices go through the roof, but really it's just a zero sum game for them. And interestingly enough, even with all these crazy ass high prices for these tech stocks, the technology sector of the US economy actually still is nowhere near the old dot com boom highs, which is fascinating, eh? Because, open the newspaper, listen to Mr. Orange Toupee. Stock market's at all time highs. Look how wonderful I am. Well, no, that's all bullshit. Oh, well, it is what it is. Also, too, an interesting conversation I had with the kids today about commodity prices because it's sort of the same thing. Um, this is a commodities in real terms. Not really a bull market, eh? Oh boy, who the hell's sending me messages now? So stupid. Why are you doing this? Where am I here? Ask that person to politely refrain themselves. Um, where was I? Yeah, so this is commodity prices in we're not going to show you the price of the asset in diluted terms. What is the actual real value of these assets? And ironically enough, I don't really see too many bull markets here. I see, if anything, the only market that really looks overtly bullish to me right now is lumber. So it's fascinating how we've had so many conversations of late about how the Wall Street hedge funds and all that shit were ape shit about lumber here and basically going and buying half of the state of Oregon here. So let's take a look at what this market looks like in the Fakese terms. There's your Fakese. I mean, look at the stock market. This is stupid. I mean, is that real? Is that sustainable? I mean, not really. At some point, this is going to have to clean itself up. There's that lumber chart in Fakese terms. Look at it. It just looks insane. But in real dollar terms, this thing really hasn't moved that much up, which is scary because if this is a bull market in real dollar terms and it really gets bullish, what the hell is this going to do in Fakese dollars? It's going to go fucking ape shit. Kind of like what you're seeing in Bitcoin right now, I suppose. um, in Fakese terms, I'm a little worried about what I'm seeing out of our food. And we've talked about this before. Keep in mind, these are yearly charts. So one bar is one full year. So what I don't like is, man, these grain prices look like they're all getting ready to just go ape shit here. And that's going to hit us at the grocery store hard, trust me. So those are the kind of conversations that I was having with the site members today. Like I said, it's a holiday, and now, interestingly enough, we're into January now, so we actually have to start following the January barometer. We should, and actually, we're even seeing maybe the smatterings of it today. Although, if I understand correctly, in crypto, the anonymous coins just got a big punch in the nose. So I don't know whether you're going to see too much out of that, out of the altcoins this year. But we should, generally speaking, in early January, the two things we want to follow. We want to follow what's called the January effect. And actually, that's all about small caps. Although the small caps have had one hell of a rally here, so we might not even see this January effect this year. But usually, stocks and I think a lot of altcoins is the same sort of thing. Um, if they've been beaten down into the end of the year, and also too, if they have nothing to do with anonymous, and maybe they have, like Decentraland, for example, Mara or Mana, I think it is, completely unrelated. That Algorand, I was looking at it, looks awesome, although I don't, I can't really tout the backstory too much. But we should see in early January, we should actually see an outperformance by the small names. Um, it's kind of funny. Here's a great example. This is Mr. Novogratz has done really well here of late. His stock is up quite a bit. And he mentioned that, oh, yeah, this is one of the projects we're interested in. Look at that, one day, bang. This is why I spent lots of time in the daily brief today talking to kids about, you don't want to make this too hard on yourself. Maybe just you're nanny nibbling and you're just coming in and nibble, 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 nibble. Just make sure to have your sell have on double orders working. And on a day like today, bang, you just got paid for all of that work. That's a very typical sort of reaction January effect. That does happen a lot in venture cap. So there are a number of stocks, of course, in early January. I'm going to be watching for this kind of movement that I've been talking to you guys about quite a bit on the site too. So I think everybody's ready, especially all our little warrant trades. Oh God, get ready. Um, and also an interesting side to this, we are kind of talking in the on the site today. There's your New Year. There's your January 1st. You go look at the gold market. It basically did the same thing into its respective cycle peak back there in 1980. Where's that? The gold. Where are you, the gold? I always have the gold on here, and then I take it off here. It's monthly. So 1980 peak. Look at the date, right? January 1st, 1980. I don't know whether we can actually get the exact date that this thing hit marked its high. Hiccup. More hiccups. All right, this was the week of January 14th. So that obviously started, I guess, probably the first week of January. Then it topped out and it never looked back. That's pretty much what I would be expecting out of the majors here going forward. And actually, also, too, really good example that we should be thinking at any given point in time, wherever the hell this damn thing tops out, right? If we're looking at Bitcoin, same thing. Just keep drawing your 38.2s, and that should be sort of the settle down point. And remember, we talked 2017 Bitcoin cycle when this event happened, and then we failed. People on social media started complaining that the higher ups broke their Bitcoins, and that was a great analogy. We had both the social influencer and the technical price action basically validating that was the end of the bull. So my hunch is probably this Bitcoin end of this move is probably going to look very similar. Also, too, if I understand correctly, we've got a couple key events coming up here, beginning of January, February. Facebook wants to float their stable coin. Maxine Waters, of course, big, she's going to take over that seat, Senate or House Banking Committee, whatever it is. And so we got her coming 100 miles an hour. And like I said, the U.S. Treasury is shitting on anonymous coins right now. If I understand correctly, Trex just sent out an email saying that they're delisting the anonymous coin proxies, and I would expect that from Trex. They're basically a complete puppet of the U.S. system here right now. And ironically enough, Mr. CZ is just going to get a whole bunch more coins deposited on his exchange. So you're probably going to find CZ. And those kind of people, they appeal even more to the international audience. Market's getting get more and more and more fractured here. Is that sort of the plan of the 1%? I believe that the 1%'s plan is to turn Bitcoin into a collateralized asset. The way that the banks and the Federal Reserve and stuff could do that is requiring U.S. citizens, if you own Bitcoin, that they have to be held on some sort of, collateral or, custodial service nonsense. And then those coins on the custodial service, they just disappear into the system, and they become collateralized assets of the U.S. Federal Reserve. I could see that makes sense. Just like the U.S. bond market, basically that was the collateralized debt instrument that all these bankers lent against. In years gone by, centuries gone by, it was gold as an asset to collateralize to lend against. I think they'll do the same thing here with Bitcoin. It doesn't surprise me. And also, too, you want to make damn sure now that the higher ups have basically deemed this as collateralizable. Let's try and freeze out all competition, and let's try and freeze out the kids from this silly notion that they are actually their own bankers. So be careful if you live in the United States of America. One might argue that for the rest of the world, this may actually set up a really cool opportunity, that maybe the rest of the world just leaves the United States behind. I got a funny feeling. I sort of joked about this in social media back, and on sites like TradingView and stuff, back in the mid '90s, or well, I guess mid 2000s. I guess I didn't really get started in your Bitcoin community until about 2013. But I joked back then that the last greed cycle was the dot com boom, and it saw basically the dissolution, collapse of the USSR, basically wiped off from the history books. Could this fear cycle apex literally be the disillusionment of the USA? Everything is in place that if the bankers now, they've got the population all juiced now, and it's actually really scary because now the population is getting very comfortable, even writing music videos and stuff about getting their welfare. I don't know, they call it stimmy. These people are now locked into the system. They are slaves. So if the banks want to pull the plug on the United States of America, they just stop these checks, and in essence you're going to have probably 50, 100 million people all fucking revolting, and that's the end of the USA. Sorry, gone. It's basically what happened with the USSR. The tell was when the USSR stopped paying the military. Near the very end there, I remember the military, they had gone about 3 or 4 months without getting paid. Boris Yeltsin started demanding freedom in Moscow and sort of, rebuking the higher ups. The military was ordered to come in and put them down. The military hadn't been paid for 3 or 4 months, and they were just like, screw you. And that was the end of the Soviet Union. Poof, gone. So, writing's on the walls, folks. I mean, I was surprised. I didn't think it was going to happen. I thought the USA was going to get through this. But interestingly enough, now the fate of the United States of America is entirely sitting in the hands of the bankers. And what a coincidence! They got a banker who was an old Federal Reserve governor, probably best friends with a Rothschild or two, getting paid like something like $7 million for speeches to companies like Goldman Sachs, and I don't know. You can read into it the scandal du jour. So in essence, the 1% says, "All right, you drive the bus, Janet. You do it correctly. We'll give you lots and lots and lots of money, so that you're completely insulated. You'll live a very good, comfortable life." So that's done. She doesn't have to worry about her nut, and in essence, she's now at the helm, or will be, I suppose, by the 20th. I'll see. I don't know. Maybe Mr. Trump still got Carter 2 up his sleeves. There could be some wild fireworks even into the 20th of January here. It doesn't look like he's going away politely. And as I said, I mean, maybe this dissolves into civil war. And that's the end of the United States of America. It's totally possible. Anyway, welcome to a Fear Cycle Apex. I thought the actual pivot was the end of 2017, beginning of 2018. I do get the impression with the Jupiter Saturn cross, that's probably sort of the celestial event that they were using. That here we are. We are in the eye of the storm now. So, oh well, we'll see what happens. Interestingly enough, the US dollar index itself tried to reverse smartly there yesterday, being that last day of the year. And it's still, if I actually do talk to you guys about what I'm supposed to be talking about here, I had a daily brief was 2 hours today. I don't know what it is, man, but I'm full of piss and vinegar today. uh, um, but U.S. dollar here actually held its cycle lows, right? That was the low that I thought was the bottom of the cycle. We're still holding in here. I'll tell you, on a yearly basis, if we lose these lows, there could be, that would be the United States of America breaks into civil war and all hell breaks loose. And, there's a big fat M and oh boy, look out. I don't know. We'll see what happens. I had made the bet that through and, live by the sword, die by the sword. When bought some Canadian dollar put options, I think that's gone up way too far. And of course, it's a commodity country. So I firmly believe that the commodity cycle is over. So betting on the Canadian dollar bullish is like betting on yesterday's story. And also I've got US dollar call option. I like that trade. 2022 call options. Not really in a hurry. I'll know that I've been proved wrong and that my thesis is completely horse hockey if we start closing below this level. And it might get pretty damn ugly pretty damn quick. So, that's probably a good sort of asymmetrical bet, right? I'm going to come in against the bottom end of the range, take my shot. That's a bit tilted up there, sorry. Bottom end of the range. Let's try that again. Take my shot. If I'm right, you can even see, I've got, yeah, let's it's a call option, so the premium really hasn't moved too much. But let's say my average is in there. If I'm wrong, there's my risk window, or I guess beg your pardon. If I'm wrong, there's my risk window, right? And if I'm right, and this thing really does rock and roll, I'm going to be, of course, looking to take profits. A half of my position gets my original money back on 50% tags. And if I'm right and we get any kind of rally back up into these highs, then, you see the substantial risk reward matrix that I'm looking at. I like this idea. I like this thinking. But, obviously, Brian is often right, but he's often early. And there's a great example of me just simply being early. And that's why I don't trade futures contracts. I prefer to trade long dated options. So I don't have to worry about being too early. All right. So, kind of a big picture kind of conversation today. It's interesting to see stocks still pointing higher here. Really big surge back at the end of the day. A lot of position squaring. I think that's probably the best way I would describe it. And now we're into January. We have to do things like January barometer, where we have to just simply watch where do the fund managers think we're going for the year, and that'll give us sort of a roadmap what to expect for the rest of the year. Okay, I think I'll leave the free rant at that. I don't know whether I helped you out or not, but hopefully you got some value out of that. I thought I'd mention again, just in case, Sunday, we have our raffle for our upcoming school term seat. So be sure to check that out. Kevin usually posts the link in the description. Also, too, there's a link to our three for 30-day trial. Come in, get to know us a little bit on the site if you want to kick the tires a bit. We do have our new school term coming up. I suppose we'll be talking lots about that after the raffle's done. And also, too, Kevin put together a cool little site where you can pick up a TRI t-shirt if you kind of feel like joining the gang and getting some swag. Okay, why don't we leave it at that? I don't, like I said, Happy New Year's. Hope you're having yourselves an okay day. PMA for the win. Go slowly here, and let's see what 2021's got in store for us here over the next week or two. All right, everybody, all the best. And Kevin, if you could take us out of here, the only thing left for Brian to say is bye for now.